So we're going live here. This is Buck Joffrey. I've got Robert Helms on, and right now looks like we've got one person on. Is that right? We've got Dave. It's Dave Zook, probably. Is that you, Dave? You can type something in. Let's see here. I don't know if you should wait a few minutes or what, but there's about 25 people that were signed up. Okay, there's another one. Hello, Jay, Jason. How are you? Drew? Good. Excellent. Looks like we've got enough to get started here. Eric? All right, so thanks everybody for joining us, and we're going to get started here. So today we're going to start out by Robert Helms is going to do the first part. Robert Helms, my guess is that probably about 90% of you already know who he is, either because he's the host of one of the hosts of the Real Estate Guys, the fact that he was actually on the Wealth Formula podcast doing an interview with me about this project, about Belize in general, and then this project. But he is the one of the main developers on the project as well. So he's going to get started out and tell you about the opportunity. And then after that, what I will do is I'll come on in and talk about our specific offering and, you know, how we're going to, what our plan is as a group of investors. And then we'll take questions at the end. So Robert, thanks for doing this for us.
Hey, absolutely. You know, I had to do something leading up to the Super Bowl. So thanks, Buck. And thanks to everyone for taking time to be here. Some of you may know me as the host of the Real Estate Guys radio show, but that's really not why I'm here today. That's the thing we do 1 hour a week. And in the rest of our lives, we're in the real estate development business. And so we're going to talk about a market that we found about a dozen years ago, and that's the market of Ambergris Caye, Belize. And Belize is a fascinating place. And so I'll spend a little time assuming you haven't been there. If you've been to Belize, some of this may be redundant, but I think it's important in any investment to understand the market first. So where is Belize is a common question. Belize borders Mexico and Guatemala, and Belize is part of Central America. In fact, 35 years ago, it was British Honduras. Today, Belize is also a member of the Caribbean Tourism Organization, one of the 33 nations that makes up the CTO, which is because it feels a lot more like a Caribbean country than it does maybe as a Central American country. One of the distinctions is that Belize is English-speaking. It's the only English-speaking country in all of Latin America. Its official language is English. And so there's really two parts of Belize in my mind. There's the mainland, which you see to the left. And the mainland's beautiful. It's jungle rainforests and amazing jaguar preserves and Mayan ruins. And then there's the islands or the keys off to the right. And there's more than 250 islands that are part of the islands that make up Belize. We call them keys, spelled C-A-Y-E-S. Some places they're called K's, but we call them keys in Belize. And that's a completely different experience than the mainland of Belize. But the mainland is beautiful. It's rivers, it's jungles, it's very sparsely populated. Belize is a net exporter of citrus, of bananas, of hardwoods, many Mayan ruin sites there, and it's just extraordinarily beautiful place. As a real estate investment, there's not that much constriction, and that's, of course, what creates value. The islands are different. The islands are beautiful, like living in a Corona commercial, white sand and palm trees and beautiful water, lots to do, lots to see. And really, that's the lifestyle that we enjoy in Belize. We spend a lot of time out on the water. So what are the things we like about Belize? Well, one of the things we like is it's undervalued compared to the rest of the Caribbean. Now, that's not to say that it's inexpensive. It's not inexpensive, but compared to a lot of the Caribbean countries, what we pay for land is substantially less. And especially lately, there's been a huge global surge of interest. We've seen tons of interest in Belize, and you've probably heard more about Belize in the past few years. Because it was British Honduras, it's got a very stable British style of government, very easy to figure out. It's a two-party system, but very much steeped in the British tradition. We talked about the importance of English. What's great about that from a real estate perspective is all the contracts are in English. Having invested quite a bit in Mexico, when I sign a purchase contract in Mexico, there's an English translation, but it's the Mexican version that is the one that dominates in any kind of legal action. So in Belize, English is the language, and the currency is easy. It's 2-to-1. 2 Belizean dollars equals 1 US dollar. Anywhere you go in Belize, they'll take either. Restaurants, bars, only places you have to spend US dollars are when you purchase real estate or stay in a hotel. Those are all done in US dollars. Belize has great privacy banking. In fact, Belize has never had a bank failure. And while there is a central bank in Belize, they have the highest liquidity requirement of any central bank on earth. So very, very stable. Belize is also one of Hoyt Barber's T8 tax havens. Those are the 8 lowest tax jurisdictions on earth. And I know that sounds great. Low tax is good, and a lot of it's good. But the negative side of low tax is there's not a lot of money spent by the government on infrastructure. And so we only have 3 stoplights in the whole country, and none of them are on the island we're on. When we first started coming to Belize, it was all dirt roads. And today we're seeing the private developers take care of most of the infrastructure. In Belize, there's no capital gains tax. So if you buy a property and sell it in a day or a month or a year or 10 years, you don't pay a tax on that. Of course, you'd have to check with your tax professional about how that relates to your tax situation in your own country. But one of the great things is they have extremely low tax on rental income. If you've read Robert Kiyosaki's Rich Dad Guide to Investing, he talks about the fact that if you look at a country's tax code, you can tell what it is that they want the investors to do. And by looking at Belize's tax code, we know that rental income is one of the things that they're in favor of investors being a part of, because they only charge 1.75% of the gross rental income. That's the entire tax. There is no deductions. There's no depreciation. There's no amortization. None of that. It's just 1.75% of your gross. Now, the downside to that is if you were to lose money, you'd still pay 1.75% of your gross. But I'll tell you, I'd rather have 1.75% of my gross of my entire real estate portfolio compared to the complicated tax laws that we have. And everything in Belize is about simplicity. So that's a recurring theme, and we'll talk about that before we're done. They also offer some unique asset protection structures and strategies. That's obviously beyond the course of today's webinar, but if you're interested in that, that could be follow-up discussion for you. Very business friendly. The powers that be there are encouraging of people to start jobs or start businesses and create jobs. You can't take a job from a Belizean. You couldn't go down there and be a bartender. But you could certainly go to Belize, open a bar, hire a bunch of Belizeans. Oh, and you can tend bar at your own bar if you choose to. Very approachable government officials. It's easy to deal with the lack of bureaucracy down there. Like any place, there's always protocols, but some people believe in big government and lots of layers of government, and some people believe in small government. And whichever side you're on doesn't really matter. As an investor, you need to know what it looks like in the places you're investing. And Belize is very, very low government involvement. It's close to the USA, within 2 hours of Houston and Miami, and daily flights from Atlanta, daily flights from Texas, both Dallas and Houston, daily flights from Miami. And then we have flights spread out through the week from a whole bunch of other places that we'll talk about before we're done. Here's a picture of Ambergris Caye, Belize. This is the single largest island at about 24 miles long and 3 miles wide at the widest. It was voted the #1 island in the world a couple years in a row by the users of TripAdvisor and one of the top 10 destinations on the rise. And the numbers, as you'll hear in tourism, are amazing. San Pedro Town is the only town on Ambergris Caye. And as you'll see, there's not a lot of big high rises and infrastructure. There's our fast food. We don't have a McDonald's or anything like that. We don't have a Starbucks. We do have Marbucks. That's about as close as we get, but it's very boutique. And the reasons we like Ambergris Caye is it is the place where most people who go to visit end up. If you go on a vacation to Belize, 70% of the vacationers are going to end up in Ambergris Caye at some point during their trip. It's the top tourism destination by a lot, and it's got the highest rental rates. When I started going to Belize, it was very seasonal. We had a strong winter high season and a very low season in the summer. That has changed a ton, a lot less seasonality now. And we've seen very much even tourism throughout a lot of the year. And there's a scarcity of suitable land, which may not sound like a good thing if you're looking to invest in real estate. But what that does is it drives the pricing. It's a proven market, has been for many, many years, and it's absolutely beautiful. And before we're done today, we'll invite you to come down and take a look because it's something spectacular. So we'll talk about the market and really what goes on in real estate there. There's lots of ways to make money in real estate. In Ambergris Caye, there's really two categories of real estate: long-term rentals, which would be your typical year or month-to-month type rentals, and overnight rentals. And we're going to focus today on overnight rentals. That's the real opportunity in Belize because of something called the Belize Tourist Accommodation Act, which is anything which actually governs any stay of less than 6 months. And it's critical for a lot of reasons. We're going to talk about the three things that drive the real estate market in Ambergris Caye and in Belize. The first is tourism, and that's probably obvious. It's a beautiful place to go. The second are the baby boomers, and they're not a myth. They're happening, and there's lots of them coming. We also include nomadic workers in that category because that's someone who can work from anywhere. For instance, one of our friends who's an attorney, he's licensed in California, but he lives in Belize because most of the work he does is in real estate syndication, and he does that on the phone or conference call or via, webinars like this. So that's the kind of person that can live anywhere, and that's also a big part of the market. And then the third pillar is, we won't spend much time on it, it's the flight of capital. These are the folks who are very concerned about what's happening in their home country and are looking for a plan B, a place offshore. We're going to spend the most of our time today talking on tourism because it's the primary driver. When I first started looking at these numbers in 2006, the room count was 670 rooms, meaning those were rooms that fell under the Tourist Accommodation Act. 670 villas, hotel rooms, bed and breakfasts, kind of everything. In 2015, 1,800 rooms was the number. And that's kind of a big jump to go from 670 to 1,800 in 3 years. You can stay on this slide for a minute, Buck. That's a long... that's a triple increase almost in 10 years. Now, most markets, if they tripled their inventory in 10 years, you could consider them overbuilt. But I'll tell you, in 2012, we had 2,000 rooms that fell under the Tourism Accommodation Act. So why only 1,800 today? Did we knock down a bunch of rooms? Nope. Hold that thought. I'm going to explain what happened. Let's talk about the overnight tourism numbers because this is really the heart of the reason there's demand. You can advance the slide here if you would. So we're going to start with 2011 because that was an all-time high. If I said that the rental rates were up, but I didn't mention that the previous year they were down, it wouldn't mean that much. So we'll start at 2011, which at the time was an all-time record. In 2012, tourism went up another 16%. People thought that was because of the end of the Mayan calendar. There was a big rush to get to Belize, so there was a lot of speculation that the tourism numbers would go down in 2013. But as you can see, these are cumulative numbers, meaning that 2013 is 6% above the 16% increase of 2012. 2014, another 11%, another 6%. And last year, another 13%. In fact, Belize now, in the last 6 years, the total cumulative amount is 65% increase in overnight tourisms. People are going there like never before. And that's for a whole variety of reasons. But we're seeing more occupancy. We're seeing more units being built, not enough units being built, as we'll talk about, but a lot of folks are coming to Belize. In fact, the Belize Tourism Board just put out a message at the end of the third quarter that we had the best year ever in tourism. It had been record-breaking. And then just in January of this year, they announced that Belize continues its record-breaking trend in tourism with the highest overnight arrivals in 20 years. So I have never been more excited about this market, even though I've been involved in this market for a dozen years. Never been more excited than I am right now. I know it's hard to read these numbers, but the big headline's the important thing, that we've got high overnight arrivals, and that continues. More people are coming. So let's do some math. We'll go to the next slide. We currently have 1,800 rooms in the market. And if the demand increased only 55%, I don't know if I've updated these numbers. Yeah, 55%. That means we would need to add another 990 rooms just to stay even. So without increasing occupancy, we'd want to add 990 rooms. So a great question would be, well, how many rooms have been added? And the answer is nowhere near enough. In the last 5 years, we haven't added any of these numbers. We've added actually less than 80 rooms. And that's a problem. And before we get to the airlines, here's the problem. We've got more and more people coming. There's more and more demand. And yet developers haven't added inventory. And a big reason has happened is because there's not construction financing in this market. There's very little financing of any kind in Belize. So it's not easy to go get a construction loan. You have to come in for all cash, which is a hard thing to do for most folks. And so there is huge, huge demand, more and more people coming. And as we'll see in a minute, more people are flying there. And the big issue we have is adding rooms. So let's talk about airlift. If you look at any international market, the most important thing to understand is who flies there. Can people get there? For a long time, we've had service from American, United, Delta, and TACA, which is now called Avianca. TACA is the airline of El Salvador. You probably recognize the other names if you don't know Avianca. American flies every day from Miami and from Dallas, and American flies United flies every day from Houston, Delta every day from Atlanta. And there's flights, weekly flights that come from Newark, New Jersey, Chicago, Los Angeles, 3 flights from Los Angeles a week. And in November or October, I guess it was, of 2015, huge news. Southwest Airlines began flying to Belize, and this has changed everything. In fact, this is the best start to an international market Southwest has ever had. In their first 6 months, they were over 70% load factor, meaning 70% of their seats as a brand new market were sold. Part of that is because the Southwest effect is that prices come down, and we've seen that. And of course, bags fly free, which is great, especially for tourists. Now, in addition, Southwest announced nonstop service from Denver. That is starting here just this year. It's only 1 day a week to start, but already those flights are virtually sold out. I'll have another Southwest announcement before we're done. Copa Airlines is the airline of Panama, and they've started flying to Belize twice a week from Panama. Now, why this is interesting is because Latin America is now connected in a direct flight to Belize from Panama. And Latin America has the opposite season that we do, meaning when it's our winter, it's their summer and vice versa. So what used to be our slow season is actually high season in Latin America, which gives us, especially South America, so that gives us a great new inroad into a new audience and a lot more destinations. And then just recently, WestJet announced, that's a Canadian airline, the first Canadian airline announced in August that they'll be coming to Belize and with a nonstop flight. There's already a lot of Canadians that come to Belize, but they have to fly through Miami or Atlanta or Dallas to get there. This has been huge. And then in January of this year, just last month, Southwest announced its second direct daily flight from Fort Lauderdale. So that flight starts in June, and it'll be a daily flight from Fort Lauderdale. So they'll have daily flights from Houston and daily flights from Fort Lauderdale and 737 aircrafts, and that's a lot of folks coming to Belize. So in addition to kind of our mainstay airlines today, we have new airlines as well, Southwest, Copa, and WestJet, and one more on the way, a big airline whose name you would know. I'm not at liberty to talk about it because we were invited to sit down in the boardroom with this airline and signed a non-disclosure about that. But they, the Belize Tourism Board, invited us to come because they wanted to be sure that if they flew it, there would be room nights. They had heard about the lack of hotel rooms, and we assured them we were doing everything we could, us and several developers, to make sure that there's going to be enough room at the end, if you will. So...
Yep. Robert, I just wanted to interrupt for a second. This Buck, I noticed actually when I was getting tickets out there that United is flying out there from Chicago nonstop to Belize City now as well.
Yep, that's another. It's not a daily flight, but you can get there from Chicago, right. And you can get there from Newark, and there's going to be more announced. So very excited about that. It's airlift's a big deal. When I started looking at this in 2006, on any given Saturday, we had 6 flights a day. Today, we're actually up to 21 flights. In 2015, we were at 19. We're up to 21 flights a day, and that's on its way to 24 flights on a Saturday. So just a little bit of advice. If you're going to Belize, try not to fly there on Saturday. It's the worst day at the airport, but it's a clue. So that's tourism. Tourism is as strong as can be. Let's talk about baby boomers. Baby boomers are interesting because there's a giant group of people. Many of you may be baby boomers. If not, you know some of them who are looking to supposedly retire. They're entering their golden years, and every day baby boomers are retiring. In fact, more than 10,000 of them a day are now retiring, and that's a trend that's going to continue. And this is a big, big group of people. And so when we look at what the baby boomers are, these are folks that are looking to change their lifestyle at some point. Now, it doesn't mean every baby boomer is going to retire. Island Magazines has said for the last 10 years that Belize is one of the, in fact, Ambergris Caye, the island of Ambergris Caye, has been one of the top islands in the world to live on, and recently was named one of the top islands in the world to retire to. You can advance the slide there. So this is Islands Magazine. Now, you know, Islands Magazine is interesting because it's aimed at people that are interested in islands, and Ambergris Caye is an island. But even more interesting is the entire market and what's happening. And really, when we talk about baby boomers, it's like this big old game of musical chairs. They're all looking for desirable retirement destinations, or many of them are. And there's only so many marketplaces, meaning of all the places you could retire, there's only so many. And the folks that are the early classes of the baby boomers are going to have first choice, if you will, of where those markets are. And then some of those chairs are going to fill up and people are going to go other places. So according to a study by the AARP, 59% of baby boomers plan to relocate, which means, of course, 31% aren't going anywhere. But of the 46 million that are planning to relocate when they retire, 21% plan to relocate to Florida and 18% plan to relocate to Arizona. No surprise, those are our two big baby boomer markets in the USA. But what about the other 28 million people that are going to relocate somewhere else? Where are they going to go? Well, back in 2014, there were more than 350,000 Americans that received their Social Security payments outside of the U.S. We call these people expats, expatriates. They've moved somewhere else. Now, according to a couple of different surveys, in the next 10 years, we expect that number to almost be tenfold. 3.3 million Americans have already decided that they'll be retiring abroad in the next 10 years. And even more interesting is that 17 million are interested or very interested in doing so. So that's a huge group of people that are thinking, I might retire offshore. And the number one region they've chosen for anticipated growth is Central America and the Caribbean, because it's warm, it's in the similar time zones, it's close to get to, close proximity for them to go home and for the grandkids to come visit. So it's a big, big deal. In fact, according to a study done by the World Tourism Organization, baby boomers are expected to double the size of the tourism industry. That's not just because they all want to travel around once they retire. It's because they're going to go visit friends and relatives, and those folks are going to come visit them as well. So we've talked about tourism. We've talked about baby boomers. This is interesting. This is kind of the intersection. This is the crux of a big issue in Ambergris Caye, the intersection of these. So imagine you've got this house in San Pedro, and it's been rented out. And all of a sudden, this nice couple shows up, and they decide they're going to buy it and move in because they're baby boomers. Well, the minute they do that, they've just taken a rental unit off the market. It used to be rented every week by people who were coming to visit. But now this couple is living in it. So instead of 1,800 units, we now only have 1,799, and so on and so forth. This is exactly what's been happening. I said earlier that in 2012, we had more than 2,000 units. Today, I'm going to guess it's probably today more around 1,700 units, because the baby boomers keep cannibalizing the inventory that we've had as overnight accommodations. There are no big, huge branded hotels in San Pedro. In fact, the first branded hotel was only announced in June. Up until then, there's never been a major brand. The average hotel in San Pedro has less than 20 rooms. And most of them are condominiums that can be owned individually. There's also single family rentals and all kinds of things. So what happens is we've got the baby boomers increasing the numbers that they're coming in to. I mean, there's more and more baby boomers coming to all kinds of markets, and that is taking the supply down. And meanwhile, the demand is increasing. So do you see how that's a challenge? We have more demand than ever. But if we look at what's happening to the supply, it's being eradicated. We cannot build units fast enough to satisfy the people that are moving into them. And so that is a challenge. So let's talk about the third group for a minute. The third group, yeah, you can get past this. So supply down and baby boomers and tourism up. The third group is flight of capital. And this isn't a group that we spend a lot of time worrying about, although some of you may know some of these people. These are the folks that are looking to get out of Dodge. They're looking for a plan B. They're not sure that they're going to make the turn in their country. Doug Casey calls these folks, they're looking for a bolt hole. A bolt hole is a place you can go hole up in the middle of the night if you have to bolt because of whatever happens. The dollar collapses, Trump ruins the world, whatever it is. This is a reason to maybe go consider having a toehold. Our friend Simon Black from Sovereign Man talks about obtaining foreign residency, even citizenship, to give you an insurance policy. Just like any insurance policy, you don't necessarily want to use it, but if you had to, having a foothold offshore could make a lot of sense. And so the concept is that there are people every day that are renouncing their citizenship wherever they live. In the U.S., Fortune magazine came out last year and said that in 2015, there was a record number of people giving up their citizenship for a third year in a row. Now, I am not suggesting for a minute that anyone give up their citizenship. That is a really harsh way to go. But this article shows us the trend and the clue. Back in 2006, the metric we've used the whole time, there were 300 U.S. citizens that renounced their citizenship and said, I'm out of here. I don't want to pay taxes in the U.S. In 2015, look at that, almost 4,300. Haven't seen the numbers for 2016 yet, but if I were to wager a guess based on everything that went on this last political season, I'm going to say the numbers are going to be even higher. We had people before the election saying, well, you know what, if Trump wins or if Hillary wins or if whoever wins, I'm headed out, I'm out, I'm gone. And we have one word to say to those people in Belize. Welcome. Come on down. It's beautiful. The water's warm. It's a wonderful place to live and vacation and so forth. So those are the three pillars. Tourism's the big driver. But the reason I want to bring this back is that what's great about the flight of capital pillar is it's contrarian. Meaning when tourism is up and baby boomers are moving there, the market is strong. That's great. But what happens not if, but when the market turns? Well, the great thing is we saw this happen in 2009. In 2009, Belize had the worst year in tourism it's had in the last decade. And in 2009, we had the best real estate sales year we've ever had. Think about that for a minute. Nobody was traveling because of the 2008 crash, and yet real estate sold like crazy. Here's what was happening. People were coming in and saying, I just want to get my money safely and securely into a real asset offshore. And those people started buying real estate for that reason. So those are the pillars. And just to understand a little bit about the marketplace, that's kind of what Belize is like. Now, I know we covered that all in less than 30 minutes, so it's just an overview. Let's talk a little bit about the project. So our project, we came to Belize back 12 years ago and started investing in Belize. And about almost 4 years ago, June of 2013, we broke ground on our first project, Mahogany Bay Village. And there's kind of an aerial view of the island of San Pedro. You can see that it's a big project. It's the single biggest hotel by room count in the country of Belize. Now, in most places, it wouldn't even register on the mark at 303 rooms. But in June of 2015, we announced our affiliation with Hilton worldwide, and we will be a Curio, a collection by Hilton. Curio is a collection of boutique hotels that are very much in harmony with the local vernacular. So it's not the same box you go into. If you go into a big Blue H Hilton or a big Red M Marriott, every room's the same, and that's fine for that product. That's perfect. But Curio is not like that at all. All the Curio hotels are different. They are designed to be unique and very influenced locally. So the project is a series of canals. And the canals are our access to the water. You can't be in one of our units and be more than 75 feet from the water. These are the artist rendition, British colonial architecture, which is the heritage of Belize, all natural hardwoods. More than 95% of the materials in our buildings are locally sourced in the country of Belize. We're incredibly proud of that. We don't build out of imported materials unless we cannot get them in Belize. We can't get washers and dryers and refrigerators in Belize, so we have to import those. But almost everything else is local. And there's what the product looks like when it's done. Where we are today is we have more than 200 units sold, and there is no financing on any of those units. So we're in for cash, which is kind of cool. So just a trip down memory lane. Here we were the first month after we broke ground, just with pilings in the ground. You can kind of just get through these pictures, Buck, just kind of show you. August 13, December, you get the idea. Little by little, this thing has grown up over time. And it's been amazing to watch. There's very little in terms of landscaping or anything today. We've planted over 1,000 palm trees. It's really, really something. It's a distributed hotel, meaning that they're individual units. And we can talk about what that looks like in a minute. There on the left is our Great House. That was August of 2016. So on the left is the Great House. That is a really interesting building. Most of our units are, 400, 600, 1,200 square feet. The Great House is a 22,000 square foot building that houses our lobby and our restaurant, 120 seat restaurant, 2 bars, 5,500 square feet of conference space. Pretty amazing building. Right now, next to it, you don't see anything in that picture, but today you would see our brand new Bay Club and pool, which has been completed for the last few weeks. Don't know if we have pictures in here of that yet or not. I sent some other pictures, Buck. I don't know if you're able to integrate those into the presentation. But anyway, that's 2016. And since then, we've added several buildings. Here's what the overall map looks like. You can see, and we'll spend a minute on the map just so you kind of get acclimated here. The part in green at the bottom, that's the village. I think the most important word in our name, Mahogany Bay Village, that's our village. We sometimes call it a townlet. It's a small town of retail and restaurants and all kinds of things. We have 9 open operating businesses today. There's another 6 that are in various stages of tenant improvement and construction, and we have a couple of more on the way. So very much a vibrant village. You'll be able to grab great souvenirs there. We have a Belize chocolate shop where we go bean to bar chocolate. These are all third-party independent businesses. We have Blue Bonefish, which is our fishing lodge. They do mostly fly fishing, but also any other kinds of fishing excursions you want. Scuba School of Belize will get you certified to dive or just take you out on tank dives. Amber Greens is our amazing, completely organic vegetable and herb garden. It is aquaponics, so we raise fish. And again, when I say we, these are independent business owners. The only businesses that we have any say or stake in is the Rum and Bean, which is our rum bar and coffee bar, coffee in the morning and rum at night, or the other way around if you want. And then we also own and are putting together the Wheels, which is our golf cart and bicycle rental company, and we have a furniture company there. But the rest are all individual businesses. We've got a brand new sushi restaurant opening this month. Very excited about that. The gentleman who runs it is a master chef from Japan. He's just extraordinary. So lots going on in the village. That's the green. The part you see in orange on the 2 streets next to each other, those are streets 2 and 3. That's the first phase of the Hilton product. That is Mahogany, the resort at Mahogany Bay Village, Curio, a collection by Hilton, 205 rooms, all sold and under construction. In the white is phase 2. That's the next 98 hotel rooms. So that'll be a total of 303 hotel rooms. In blue are the townhouses and single family houses. So in the context of the presentation, you might think of the white and the orange as the traveler, the tourism market. That's the hotel. And blue more angled towards the baby boomers, folks coming to either live down there or spend 6 months in Snowbird or want to have a house for 6 weeks a year and rent it out the rest of the time. So that's really the overall. Like the next slide is just a little more about the village, but we talked about some of that. I didn't tell you about our Farmhouse Deli, which is our general store, an amazing deli. That business is just getting ready to open. We've got Polish, which is a hair and nail salon. They're open for business right now, and a lot more businesses on the way. Very excited about that. So let's talk a little bit about the brands involved. Again, we're the first branded hotel in Ambergris Caye, and the first brand is Curio Collection by Hilton. And this is an upscale hotel brand. In fact, if you go to the next slide, you'll see there's 13 brands of Hilton hotels. At the very top is Waldorf Astoria, followed by Conrad. Those are both 5-star hotels. Curio is a 4.5-star. Canopy is a 4-star. That's a new type of hotel. Those Curio and Canopy are both just a couple of years old. And then you have the 4-star Hilton hotels, 3.5-star DoubleTree hotels, and the list goes down from there. And you see what some of the competitive examples are. The next slide shows really why we're excited about Hilton worldwide. Their Hilton Honors program is one of the most successful loyalty programs there is. More than 50 million members, and that increases all the time. They've got huge infrastructure. Belize is the 104th country that Hilton operates in. They've got an amazing backbone and infrastructure. They drive something called RevPAR. So if you're familiar with real estate investing, most of us who invest in houses or apartments, we're looking at what our cash on cash return is, or capitalization rate. In the hotel business, don't go to that one yet. In the hotel business, we use a different metric. It's called revenue per available room, RevPAR. That's the most important number in hotels, and it's determined by taking what we call the ADR, our average daily rate, and multiplying it by the occupancy. So what Hilton is masterful at is driving RevPAR, and it happens through group sales, through point sales, and think about how you accumulate points for any point programs you're in. Typically, we earn those points for business while we're on work trips, and we spend those points when we go on vacation. So being a vacation destination means that we're the recipient of millions and millions of Hilton Honors members looking to come to Belize, and they've got a big program to introduce us to that world. So very excited about the affiliation with Hilton. It's turned out to be just amazing. Even more interesting, I think, is our next affiliation, which maybe got a sneak of there. And this is Coastal Living Magazine. So we've just announced our affiliation with Coastal Living. Coastal Living is 20 years now in the magazine business. They're one of the top 5 magazines by income per reader. And maybe you've never read Coastal Living Magazine, but it's really aimed at the person that wants to live near the water. And it's a phenomenal magazine for our avatar. In fact, the people who read Coastal Living Magazine are more into this development than even my partner Beth and I are. I mean, they are the exact person we're after. And our architects from Studio Sky introduced us to the folks from Coastal Living, and they came down, and we've been courting with them for almost 2 years, and just decided to put together this amazing program. And in December, the December issue of Coastal Living Magazine, that's the next slide, has a full page ad about Belize and Mahogany Bay Village. This is an ad that we didn't pay to run, so we're super excited about that. And it really is an ad to come down and experience what they call the Coastal Living Paradise Weekend Experience. It's a 3-night, 4-day adventure. People pay for it, but they pay $4.99 for 3 nights in the hotel and a snorkeling expedition and food and tour. And it's aimed at second homeowners and retail buyers, folks that would be interested in single family houses and townhouses primarily. But what's really interesting about Coastal Living is the fact that they're owned by Time Incorporated. And based on that, they came to us and said, would it be okay with you if we ran this same ad in People Magazine? So we ran for 3 weeks in 3 editions of People Magazine, followed by the commemorative Star Wars Rogue One edition, where the inside back cover, one of only 2 ads in that entire magazine. And this has been extraordinary. I can't believe we had to do this, but we literally had to call and ask them to take the ad out of the magazine. Now, here's why. Our avatar is Coastal Living. We want to be in that magazine for sure, but People is not our avatar. No disrespect to anyone who reads People Magazine, but the majority of folks who pick up and read that magazine are not looking to spend $500,000 in Belize. That's just not who they are. The folks in Coastal Living, different story. But we were thrilled that they ran this, and we got more than 800 inquiries. And it's about to run in another one of Time Magazine's magazines. In fact, Time has over 100 magazines. We're about to have an ad in Entertainment Weekly. They also own Fortune magazine, Sports Illustrated, Travel and Leisure, Food and Wine. I mean, it's amazing. Sunset Magazine, Southern Living Magazine. So this has become a really, really great affiliation. And I think from an investor point of view, the thing to take note of is how many projects have been vetted by Time Incorporated and Hilton Worldwide, right? It's been a big process, 13 months of negotiation with Hilton, 2 years with Time Magazine, and those are mostly just big votes of confidence. So very excited about our affiliation there. So what is the opportunity exactly? Well, the opportunity to invest is to come alongside other investors in what we call a real estate syndication. And this is just to look at the product types. Our entry product is a garden cottage. This is a small hotel room. It's got a beautiful king size bed. It's got just a little sink and under counter half refrigerator, coffee pot, beautiful outdoor shower, a couple of chairs, nice front porch. You'll see the floor plan here. If you advance the slide, it's just a simple hotel room, and it's got its own four walls, so it's not attached to anything, but it's designed to really answer the problem we have in the marketplace, which is we don't have enough rooms at the inn. Now, the next slide is an artist rendition. This is what we said they were going to look like. That's what the artist drew back before we had anything to show. And today, this is what they actually look like, pretty close to what the artist rendition was. So, looking ahead, these are some interior photos, all the beautiful Belize hardwoods. We use Santa Maria and mahogany, obviously. We use a couple of woods called bullet tree, which is a really, really strong wood, and cabbage bark, same thing there. But the idea is to have it feel local. It feels like the materials that are exported by Belize, which are the beautiful hardwoods. There's also a additional type unit called a fish camp, which is the same unit with a little bunk bed up top, so it sleeps a couple more folks. But we probably don't need to spend much more time on the fisherman camp. The keeping suites, these are the only 2-story units that we have, and really what you're looking at there is a picture of one lot worth of product, 4 keeping suites. The downstairs have 2 beds, 2-bowl sink, big 140 square foot screened in porch, and a little kitchenette and office area. That makes them a little different. Here's the artist rendition of what we call live work, so the keeping suites that have businesses below. And then I think we probably have the actual picture of what they look like built in terms of the keeping suites. And again, downstairs, think about a hotel that's got, a king bedroom that connects to a room with 2 double beds in case of families traveling with kids, or, you're traveling with a business partner. These are the lower units here are 2 beds. And you can advance the slide. You'll see the interior of the units. And again, with the wood and they're just really beautiful units, big high ceilings. The outdoor porch, this is a picture of the porch that is before the screening went in. So they're screened now, but they're beautiful sitting areas, great place to sit out and enjoy coffee or a cocktail. Inside, you've got a couple unique things about the units, the built-in benches and closets, which are behind those drapes. You don't need a lot of clothes when you go to Belize, so a couple of outfits and some bathing suits and you're good. The lower floors keeping suites all have 2 beds. The second floor, the upper keeping suites, very similar. It's got an indoor porch, which you'll see in a minute, and it's got the same little kitchenette, a little office area, and then a king bed and bathroom. So king upstairs, queens down. Built-in cabinetry, that's the little office you're looking at across, so you can be in touch but out of reach. We have super high speed internet, and there's our little porch area, which has got the louvered glass windows and separate air conditioning, so it's a nice place to sit out and watch the sunset. That's the keeping suite product. Our biggest product is called the Family Cottage. The Family Cottage is over 1,200 square feet. It's got 2 bedrooms, each with a bathroom, and then a little bunk room, which is 2 built-in bunk beds. This is the unit my family and I stay in. My wife and I take the master. My dad travels with us at times. He takes the guest bed. And then there's 2 little built-in bunk beds. These are beautiful, beautiful units. And really, this is the unit we're not so sure about, in that everything in the market tells us that what really has the highest demand are hotel rooms. But these units are extraordinary, and based on the Hilton's take, they think this is going to be our most popular room type. So who knows? Big full kitchen. This is the only unit in the hotel product that has full-size refrigerator, washer and dryer, stackable washer and dryer. It's got a dishwasher. It's got a stove. So it feels a lot more like a home. And in fact, this same style home is available on Street 4, our residences. But these are really, really nice units, really done well. In fact, you can get this in the residences. You can get this exact same home if you choose with a swimming pool. We have a beautiful bay club and swimming pool, but you can get this particular home with its own swimming pool. And in fact, if you were to go today to Mahogany Bay Village, you'd go to Street 4 and you'd see this home, which is the family cottage with its own pool. So that's another possibility. Now, we also have townhomes on Street 4. In the townhomes, there's 2-bedroom townhomes and 3-bedroom townhomes. These are beautiful units with big, tall ceilings and great living areas, really designed for the baby boomers and the expats. But certainly you could have overnight accommodations here, and we have a rental program to rent them out. But pretty nice units. And this is really, we've started now in the last few months into our retail sales. We started with the first product we tried to solve was the hotel issue, not enough rooms at the inn. So that's what we built first. And now we're after the baby boomers with what you're seeing here in the townhomes. The 3-bedroom townhome is absolutely extraordinary, just a beautiful, beautiful unit. And this one, we keep the air conditioning cranked way down on. So when you walk in the model, it is freezing cold. And we do that to make a point. People sometimes think that wooden houses aren't efficient or you can't get them cold. And that's not true at all. Maybe not as efficient as concrete, but they breathe and they don't mold. So anyway, there's the townhouse product. And then we've got a couple of single family houses. And the single family houses are now Coastal Living branded residences. So very excited about that. The first one is the 2-story home here. It's 2,160 square feet. That's an artist rendition of it. That's not a real house. It looks real, but it's not. And then we've got a 3-story unit, which is almost 3,000 square feet that can be up to 5 bedrooms. So those are the units. So what are the opportunities? Well, the opportunity is Buck is doing a syndication. And I think at this point, we'll let him talk about that.
Yeah, thanks, Robert. And excuse my crazy finger there. If you probably some of you figured out that I was controlling the slides there and trying to keep up with Robert, but he and I are not in the same place. But thanks for doing that, Robert. And I wish I could have kept my finger up with you a little bit better, but that was a fantastic presentation. So I'm going to go into the opportunity specifically that we're talking about, which is our syndication. Now, if you're interested in an actual, living like a second home or something like that, that Robert talked about in one of those larger homes, you should, definitely let me know. I'll connect you with Robert, and that's something that you can look into yourself if you like. I am focusing on this property as Robert made sort of the distinction between, those people who are kind of having second homes, baby boomers, et cetera, versus the opportunity from the standpoint of, real as an investment in a hotel product. So as everyone here is a listener of my show for the most part, we talk about syndications all the time. Basically, it's a private placement. So we're talking about having fractional ownership in multiple lots, and lots are essentially different types of products. So for example, in the Keeping Suite, there is one of those smaller units, and then there are two of those two duplexes. So that makes up a lot. And effectively, what we're doing here is buying, up to 6 lots. And then everyone who's in that syndication has fractional ownership of all of those particular of that property. As a reminder, of course, if you haven't figured it out by now, it is a Hilton product, and the pro forma annual cash flow at stabilization is 8 to 11%. We're trying to raise anywhere from, I know this is a big range, but $850,000 to $5.1 million, and that's really based on how many lots are available and how many we can actually, how many we can actually buy with the amount of money we raise. So obviously, we have to raise at least $850,000 to buy one. Hopefully we can buy 6, and hopefully there's product left for us, because that is a little bit of a concern at this point, because they're getting close to the end. The minimum investment for this product, for this syndication, is $50,000. It's open to accredited investors only, which since this is the accredited investor group that we're talking to, shouldn't be an issue. IRA funds are allowed, and this might be a potentially interesting project for that. The one other thing that we're featuring here is that we will have a complimentary off-peak yearly week stay in one of the units that we own for anybody who invests $200,000 or more. So as I mentioned before, looking at this as an investor, and again, I'm doing this because all of you, for the most part, are listeners of my show. When you look at it as an investor, the sponsor, that's me, has skin in the game. I've pledged at least $100,000 to this project already. The developers, Robert and the rest of the team there, have a great track record. And obviously the Hilton brand affiliation helps us a lot. And so it's obviously, as Robert pointed out, very clearly a great market opportunity. And in real estate, as we know, it's all about location, location, location. We're talking about very favorable demographics. The other thing I want to point out is that the 8 to 11% projection that we have is the cash on cash is not leveraged. And Robert mentioned that again before. And so essentially because there's no loan on this product, it effectively, for those of you who are used to multifamily real estate, it turns out to be a projected capitalization rate, so of 8 to 11%. Now, obviously, if we do get leverage, then those returns go up, and we can't make any guarantees, but we anticipate that there's a very good chance, especially given the product type and the location and the brand affiliation, that there's a strong opportunity or chance of us being able to obtain leverage over the course of the next few years. And if that happens, it could be the case. What I would hope is that we could leverage enough, whether that's 70%, et cetera, so that we can pull everybody's invested capital out, and then essentially we would have infinite return with whatever's left, because you've gotten all your capital out. But again, that's all, it's a little speculative, but with leverage, obviously those are the things that you're looking at and are possible here. The other thing I want to point out is that the projections are for stabilization, and they're not a 5-year pro forma. And that's really important to me, because Robert and the developers there who are helping us put together these projections are being very conservative, and they don't want to tell you about a lot of the upside that there's potential for. They could give you a 5-year pro forma showing ridiculous returns, but they're not doing that. And I appreciate that, and we should all appreciate that. But what we should also know is that Hilton raises their rents aggressively every year. So even without leverage, the returns have a really good chance to appreciate over the next 5 to 7 years. We're not looking at this as something we're going to flip, but 5 to 7 years from now, it depends. What we could potentially get out with. The other thing I like about this opportunity, and I'm not one to invest a lot in developments, but this is a really unique situation where there's a good chance of being complete and stabilized in about 1 year. And Robert, you can comment on that a little bit more as you're there on the ground. And certainly from the stabilization standpoint, meaning that, okay, now the product's done. Now, when are we going to get people in the door and staying here? The Hilton affiliation, as Robert has really pointed out, we should absolutely speed things up. Now, again, there's no leverage, so there's no debt burden for the hotel as it ramps up. And, ultimately, it's also something that will help you diversify your portfolio. After all, who has a part of a Hilton branded hotel in the Caribbean in your portfolio? I mean, that's unusual, and it's a good opportunity. There is, and I alluded to this before, but I think that in my mind, there's a substantial exit possibility. When we get strong cash flow, if we get strong cash flow, like we project we're going to over the next few years, that's great. But then there's also a potential strong speculative component of, being able to sell at a much higher multiple than we're actually getting in for. And that's my favorite kind of deal where, you have good cash flow, but you also have a chance to get some additional capital gains on the back end. And finally, it's also potentially a really good opportunity for IRA money because, again, if you're not looking for cash flow tomorrow and you can wait a year or so until stabilization to get cash flow, then this certainly meets that criteria as well. The best way to figure this out, and certainly not everybody has to do this, and most investors don't, but going out and seeing what Belize is like. Ambergris Caye and the barrier reef, and it's the biggest living barrier reef out there. If you can make it, I'll be out there on February 17th through the 20th. I know a couple of you, like Ross, I know you're coming out. It should be a really good time, and you'll meet Robert. And it's 4 days and 3 nights, and that would be the absolute best way for you to to discover the opportunity. But even if you can't, I think you're getting a sense for what it's like here. I want to back up a little bit about things. Everybody here is part of Investor Club because you're all from my the list, the Investor Club list. So some of this is for the possibility that people are listening to this after the fact in a recording. But this is the first opportunity that I'm offering through the Investor Club. And this one happens to be Reg C. Now, what that means, this is not really valid to you because all of you have a pre-established relationship with me. But what it does do is it requires a third-party verification. So if you decide to invest, you will need to, have an accountant write a letter or have, some other proof that you are indeed an accredited investor. Now, most of the offerings will actually be Reg D, and that essentially requires a pre-established relationship with me, whereas Reg C doesn't, and it's open to accredited and sophisticated investors. But again, you have to have a pre-established relationship to me. And for those who are watching this on a recording, you can join Investor Club at wealthformula.com. The offering is going to fill up as the investments are received on a first-come, first-served basis. And if we're oversubscribed, we'll just need to return your money. And for future offerings, priority is for oversubscribed offerings will be given to the previous investors, people who've invested before. And the reason for that is really just because what we're trying to do is create a steady stream of investment opportunities for people who are really dedicated to the whole concept of real asset investing. Now, if you want to get in touch with me, you guys all have this information already because you get emails from me. You've been getting emails from me every day lately, but contact me. There's obviously my phone number. You've got my email as well. The next step would be to look at get in touch with me to get an executive summary, and if things are really interesting to you, then to get the investment documents in step and go from there. So now what I'd like to do is open it up for questions, and I think we can get started here. And the way we have to do these questions is by typing. We're not going to be able to hear you. So go ahead and start that. There is an 8-second delay here as well. So questions.
Looks like we have a couple questions already there, Buck.
Oh, there we go.
So I see a question: how long do partnerships with a big brand like Hilton last? Is Hilton a partner, or is it an affiliate program? That's a great question. The Hilton agreement, it's a franchise agreement. So Hilton doesn't, it's funny, when they came to us, they approached us. We didn't approach them, although we'd looked early at some brands. And frankly, we came to the decision that, in this little boutique market, number one island in the world, it's doing just fine as a boutique market. I don't think we need a brand. The reason we would consider a brand is because of our scope. We're so much bigger than any of the other hotels. And then Hilton came to us and really convinced us pretty quickly that what the cost to be a Hilton is more than made up for in terms of the benefits that you get. But it's a 10-year agreement with 2 10-year options at our discretion. So they've committed to 30 years to us. They would like to be in place at least 30 years. We've committed to 10, and we have the right to increase that in 2 10-year options. We can only lose our Hilton affiliation for cause. So there's not much we can do as the owner. We're essentially handing over the reins to an operating company, a management company, and the Hilton systems, and that's what we're after. Our background is real estate development. I don't know much about hotels, and you certainly don't want me at the front desk and my partner in the kitchen. And then we're instead going to, hand this off to Hilton. And so very excited about the affiliation. They have been great. They are so unbelievably professional. But it's a franchise, so we pay them a fee, and the fees we pay are basically dependent upon how much work they do. They make 5% of the gross income on every room stay. If they book the room, and Hilton books at least a third of their rooms through Hilton websites, which is great. When you use an OTA, an online travel agency like Expedia or Travelocity or Hotels.com, you're going to pay from 15 to 35% of your room rate to that company. And how much it is depends on how long you've been with them, how many rooms you have, what your bargaining power is. At our size, we would be about a 25% hit to the OTA. The minute we signed up with Hilton, because of their volume, we went to 16%. So that saved us 9%. But even more important are the rooms they book directly. When they book directly, it's a 4% fee. So we're expecting that not only will they drive ADR, but they'll bring the cost down. And that's the way that the program works. There was a upfront fee, per room and all that. And then over time, there's a fee we pay internally to cover their systems. And rather than have to go out and buy a bunch of software, it's all cloud-based software that's run by Hilton. So it's a great program, very, very sturdy and stable and proven. So it says,
there's
go ahead.
There's some from the developer side. Why don't we field those first? Jay's asking about the probability of leveraging up. You might have a better perspective on that, Robert, in terms of over time. I mean, I know it's pretty speculative, but do you have any sense for that?
Yeah, absolutely. Today, they claim that the local banks make loans on real estate. We just haven't seen that to be the truth. It's not that they don't want to make loans, but they're so conservative. Again, never been a bank failure in Belize. Not too many countries you can point to and say that about. They've never had a bank failure because their typical loan is 60% loan to value, 40% down, and an interest rate of 11.5%. And that's not exactly a great loan. However, the foreclosure law in Belize is awesome for lenders because the way it works in Belize, again, everything's really simple. The law in Belize is very simple. And the way it works for lenders is the lenders hold title to the property until it's paid off. So you have to give the title to the property to the lender until the loan's paid off. And therefore, if you don't make your payment, they simply have to contact the land ministry in Belmopan, where there's a recording against your title called a charge, like a lien. So there's a charge on title, which is notice to anyone in that, hey, there's a loan on this property. If the borrower doesn't pay, then the note holder sends the notice to Belmopan and says, hey, we haven't received our payment. And according to the terms, this loan is now in default. And the land ministry says to the borrower, sends a letter to the borrower that says you have 30 days to prove that you made the payment. And if not, we will remove the charge. So literally, if a borrower doesn't pay, then instantly 60 days, it reverts to the owner. So because of that, there is a ton of interest for third parties to come in and make loans. And we're now in negotiations with 3 different groups. And my guess is within a couple of years, we're going to have a pretty good looking finance package. There is no distinction in Belize law between a purchase loan and a cash out refi. So, in the US, those are 2 different loans, typically done by different people and different underwriting criteria. It's all the same there. What they'd be looking for is stabilized income. If we can show that it's been, running for a year with income, then we're going to be guessing we're going to see the ability to get a loan out. And it'd be up to the manager of your fund to decide whether or not the loan makes sense. We're pushing for a higher LTV and a lower interest rate based on the risk. We perceive the risk as being a lot lower than it might be in other places because of the ease of the foreclosure process. So don't know how long that's going to take to be in place, but it's something that all of our buyers so far are definitely interested in. We've 100% sold everything that we've sold for cash. There's been no loans. One of the banks in Belize, the second largest bank by capitalization, came to us a year ago and said, we have $5 million we'd like to loan to your borrowers. And we said, well, great. The word on the street is you guys don't actually make loans, however. And this was sitting in the president's office. And he said, well, I have to own that. That's true. We've been very difficult, but we've streamlined the process. We're making good headway. We've closed 3 loans in the last 60 days. So what we did is we gave him our all-star borrower, a gentleman that had bought more than 1 lot from us, has pristine credit, great income, and he was very interested in looking at adding leverage to a property he owned himself. Well, I think he and his brother. And after 6 months of attempting to get the loan, he called me and said, they've just asked me for the same piece of paper for the 4th time in 6 months. I'm done. So I'm not holding my breath for Belize banks to be making loans. But what I do think is going to happen is we're going to see third parties come in, funds and banks from other areas. We've got a bank from Turks and Caicos we're dealing with that are very interested in making loans. So I certainly would not count on the exit strategy being leverage, but I think there's a better than even likelihood that that's going to happen.
Yeah, I would think so too. I think for just to Robert's point, I mean, the key here is if you've got an asset that's thrown off cash for 3 consecutive years, it's doing well, it's growing, et cetera, then the likelihood is really good. I mean, what do banks want? They want stable assets, and that's the definition of a stable asset. So it is a little speculative, but the good thing is that you've got pretty darn good projected income even without it. So let's see. Let's go on the next. What is the exit strategy, Jay? I think you have to think about this as a relatively long hold. I mean, I think a minimum of 5 years, up to 10. I think that, it really just depends on the market. I mean, I think we get in, hopefully we can refi. If we can't, we can't, over time. And we wait until an ideal opportunity. Now, if somebody comes in before 5 years and offers us crazy money for the property that we have, the part of the property that we have, then maybe we'll think about it. But I think this is a cash flow play, at least for 5 years. I would count on that. You said that. There's a couple ones here I think that might be good for you here, Robert. Does the fund pay Belize taxes, or does each investor responsible? So essentially, we're going to have K1s, and at that point, the investor is going to be filing their own taxes. Can you talk a little bit about the intricacies of that part of this, Robert, in terms of?
Of course. Yes, with the disclaimer that I'm not a tax professional, sure. Happy to talk about that. The tax that's due in Belize is 1.75% of the gross. That's typically taken out at the management company level. So before this fund receives its net proceeds, that will be paid in Belize. So the taxes in Belize will be paid there. And then, if I'm understanding, Buck, your syndication, it'll be a simple K1 for your income, and you'll include that as part of your taxes. So, right. That'll be dependent upon each person's tax situation, how you're taxed, but it depends on each person's tax rate and all of that.
Yeah, I mean, so I think you have to treat it. I think, and if your question is, you're basically going to get a K1, and it's just going to tell you're going to give that to your accountant because you're a partial owner of this property, and then they're going to handle it, the way that it needs to be handled. And there shouldn't be a significant amount of complexity to it. Let's see. Jay asks, what reassurances can you provide that our units will get equal rental treatment by the operator as any other unit?
Yeah, that's a great question. And there's two ways that you handle rental pools. And having spent the last couple of years really studying this for this purpose, one is called a pooled system, and that's where we would take everybody who owned, say, a keeping suite. We would take all the income from all of the keeping suites and divide by the number of keeping suite owners, effectively giving everybody with that product type the same income, regardless of whether or not someone stayed in your actual unit. The other way is through a rotational system where when a call comes in for a keeping suite, it goes to the first person on the list. And let's say it's rented for a week. Then our call comes in for a keeping suite. Now it goes to the second person and it's rented for 2 days. And the third is for a month. And the fourth is overnight and so on. The person that has a shorter rent comes back up to the line earlier. And over the course of a year, it's designed, the software that runs this rotational system is designed to equal out the demand for each unit type. Now, there's a couple of things that Hilton requires us to be able to answer, and that is a guest request. If a guest is checked into your unit, and that's the unit that the software has assigned them to, and they get there and say, oh my gosh, every afternoon the sun is coming right into our room because we're facing the sunset, we'd like to move rooms, then we need to accommodate that person. Another person might say, well, I want to be on the sunset side of the view, right? So, but as soon as we do that, let's say you had a week-long rental and we moved a person on day one. As soon as we do that, the software goes back in and computes when it's time to rent your unit again. So it's designed to have it be as equal as possible with one exception, and that's personal use. If you decided to take personal use out, now in this syndication, you aren't taking personal use out except for the investors that put in $200,000 and more. Buck has to take that time off of the number of days the unit is available. So those unit days are not available if there's an owner staying. And that's the only exception. But again, that all gets factored in. So the system we're using is the rotational system, frankly, because Hilton requires it. Hilton is an international corporation with their primary offices in the U.S., has to comply to U.S. law. A pooled system, while a lot of people favor it, is not legal in the United States. It's viewed as a security. And so to avoid securities issues, and because it's a Hilton requirement, we're going to be in a rotational system. And it's designed over a 2-week period. One unit might have higher rent than another, but over a year, it's going to be floating point error.
Here's another good question. Drew says, you mentioned in the podcast being very close, 75 feet to the water. What about flooding risks and what are the insurance issues?
All right, another excellent question. It's a low-lying land. It's an island, right? And with global warming and everything else, you definitely need to be concerned about the rising tides and what happens in a flood situation. We had a great dry run in August when we had our first hurricane, a Category 1 hurricane hit San Pedro. And we were concerned and we battened down the hatches and we, came through in amazing flying colors. We broke 3 windows and 4 palm trees. And all the buildings are built to Category 3 standard, except for the Great House, which is Category 5, built to U.S. Assembly standards. It's our muster station for a hurricane. It'll hold 700 people for 24 hours. It's also got a 24-hour fire room. So it's the safest building that exists in the country of Belize. Now, what about insurance? Well, what's really interesting in Belize is that the insurance is something called all perils insurance because it covers everything. Unlike our insurance that we're used to with every possible carve out and rider and exclusion and insurance companies that look to deny claims, Belize, it's very simple. It's based on the actual damages. And so you have the right to select a deductible and an amount of coverage, but after that, everything is covered. So you would think insurance perhaps like that would be more expensive. It's maybe 10 or 15% more expensive than a comparable policy in the US, except it doesn't have any carve-outs. So great insurance policy. And we have negotiated with the top insurance company in Belize a very favorable rate. They were able to underwrite the project. If we agreed to have all of the units covered by the same insurance company, which, by the way, isn't something all insurance companies want, but if we agreed to that, they gave us a discount that has been reflected in the insurance rates for all of the owners. So as far as floods, the canals are built up about 3 feet above the water level, and the houses are built another 3 feet up. So you're nearly 6 feet above the median high tide. The highest recorded water rise we've ever had in San Pedro since they've been keeping record has been 42 inches. So the other thing we do is we build in such a way. There's 2 ways to build for hurricanes. One is to be airtight and not allow any air in. As soon as a hole the size of a dime it breaks the integrity, then the thing implodes, like all those condos did in Hurricane Andrew. Or the other way is to allow the wind and the water to come through the units, and that's how we've built. We don't have any sheetrock or drywall. The buildings could take a substantial hit of rain or water and barely be affected. We have marine treated underlayment, the only wood that's not produced in Belize because we can't get it there, to create a great barrier. And then all of the furniture, same thing, is designed that it can withstand that. But we were standing there in the thick of the hurricane, and the water never even got up over the canals. So it's also protected. If you look, this is a great picture to be looking at. If you look at the far right side of your screen, that is some of the deepest water in the Caribbean. It's over 3,000 feet deep. If you look at the little part that is the lighter blue between the island and the break there, the break is the reef. That water is 8 to 10 feet deep. And that means you can be deep sea fishing out in that water, the dark blue water, and still see the shoreline. So because of that anomaly, that is a giant wall that is built around this island. It is as if we had sent the Army Corps of Engineers to build a wall a half a mile wide and a half a mile deep around New Orleans. What would that have done to Katrina? That's what the reef naturally is it's a half a mile tall and a half a mile wide, and it is nearly impossible for any serious storm surge to work its way up because of the huge difference between the depth of the 3,500 foot water and the 8 foot water. Not only that, if you see where we are in the lower corner, the entire front coast protects us from that surge, and on the backside in the lagoon, the same thing. So we're extremely well protected where we are from any kind of natural disaster, but we are fully insured for it.
Great. So another quick one from Ross, $100K from personal funds, $100K from IRA. The mix, yeah, you can do it whatever way you want. That's fine. Drew asked a question. I think this is Robert. We when we put together the pro forma, we have some rates of occupancy that you helped with, and that can you talk a little bit about that? Because you gave us some different scenarios: catastrophic, real.
Yeah, absolutely. So rather than come up with what we think is the rate of occupancy, we tend to favor a range, right? What happens if it goes well? What happens if it doesn't? What happens if there's recession? What happens if we continue on the path we're on? And that gives us kind of this range of return. And I think when you articulated it in your documents bucket, it looked like an 8 to 11% return. But we have to make some assumptions, obvious, on what the occupancy is going to be. So let's talk about the seasonality in San Pedro. We have really 3 seasons, and this depends on the hotel. Some hotels don't make any adjustment. Some hotels have only 2 seasons, and some hotels have 3. But most hotels have what we call value or low season. That's the lowest occupied time of the year. They have high season, which is right now, and it's the highest occupancy of the year, except for the 5 or 6 weeks we call peak season. Peak season is Christmas, New Year's, Easter, Thanksgiving, the Costa Maya Festival, which is Miss Central America, always happens in San Pedro, and Lobster Fest. Those 5 or 6 weeks of time, we essentially have 100% occupancy on the island. It's frustrating to try to get a room on Easter break. It's just, the hotels are all right now. The major hotels will be booked and completely sold out for this coming Christmas and New Year's 2017. Victoria House is already completely booked for Christmas and New Year's 2018. That's the resort right across the street from us. We've yet to take a booking officially, so we have occupancy available. But overall, the island has been occupied for the last couple of years in the high 80%. In the high 70%, with the nicest hotels being occupied more than that. Victoria House across the street from us is a great example, and we have their numbers. For the last year, 2016, they were 92% occupied over 49 weeks. They close their doors for 3 weeks every October. That's when the whole staff takes the vacation. That's when they do all their sprucing up and their work. So their occupancy is based on the 49 weeks they're open, and they're at 92%. Matachica, 5.5 miles north for 2016, 87.6%. So the hotels are well occupied year round, but in high season, the rates go up. That's the big change. 10 years ago, there was a big difference in the percentage of occupancy. Today, we don't see that as much as we see the rates increase. So for sure, there's a premium in high season, which again is now through, probably Memorial Day. And then it drops a little bit June, July, August, although we see a lot of great summer travelers from Texas. It's 95 degrees in Belize, but 110 in Houston. So people decide to come from Texas. The lowest occupancy of the year is late September, early October. It's muggy and buggy and hot and not a lot of fun to be in Belize, but it's still better than being most other places. So we do see people come down at those times. It's not like there's nobody there. And so what we typically look at, and your mileage may vary, but is about 6 months of value season, about 5 months of high season, and 1 month of peak season, all of which we think is pretty conservative. My baseline when I look at occupancy is I like to look at 60% in low season, 80% in high season, and 100% in peak season. Now, the actual numbers turn out to be higher than that, but I'd rather, be on the conservative side because we got a lot of rooms to fill and the market can and will change and all of that. But I'm sure if you look at the prospectus that Buck will make available to you, his executive summary, he will have talked about what some of the assumptions are for the occupancy rates and the rent rates. The rate of rent, that lands squarely in the hands of Hilton to decide. That's why we've hired them. We had a third-party study done because even though I think we know the market pretty well, Hilton insisted we had a third-party study to come in and check out our assumptions, and a group called PKF Hospitality did the study. It cost us about $25,000 to do, and they basically came back and said that they thought our suggested rental rates were too low and that our occupancy amounts were too low as well. So their numbers were more bullish than ours, which amazed us. We're about to get that study re-upped because it's been a little while and we don't have any of our townhouse or they do two things. They do absorption and then they set their suggested rental rates for various product types, which we've done for the Hilton product, but we haven't for our townhouse and houses. So we'll probably have that updated here shortly. But the Hilton is very, very bullish on the market, as are we. But, as any investment, you want to temper that with what could go wrong and what happens when tourism gets hit, or there's a ban on tourism, or the market slows down, or there's another recession, or whatever black swan event you want to give. Because we're in at no leverage, we don't have the burning fuse of debt. And property taxes, by the way, 1 night's of rent typically pays the property taxes. Right now, the property taxes is unbelievably low. It's scheduled to go up to $300 per bedroom per year. So for a keeping suite, that would be $300. If you had a lot with 4 keeping suites, that would be $1,200 a year. Today, that lot of product that should be a $1,200 property tax, which I know is laughable, right? I live in the state of Texas, and my property tax is $40,000 a year. Right now, the property tax on that lot is $116 a year. So property tax is never an issue. My point is, if things were to go bad in the market and tourism and all that kind of stuff, you've only got minimum amounts to cover to be at break even. So that's a pretty solid place to be. You don't have a loan payment you have to make every month.
I think Jason has a question about the GPLP structure. Should definitely look closely at the executive summary and the prospectus and but specifically, I think you're asking if there is a waterfall over a certain hurdle, and there is not. There's no waterfall. Ron, how often do you expect to make distribution once stabilized? I would say quarterly. I think we want to make them as much as we can without, making, depending on how many investors there are. We don't want to spend too much on accounting. We'd rather, distribute that money out to you guys. So quarterly. Let's see. John, John asks about the townhouses. John, why don't you get in touch with me offline at buckjoffrey@gmail.com, and I will point you in the right direction there. Outside of that, let's see. I think that's it. Any other questions from anyone? Second two here.
Must say these are all really good questions.
Yeah. Let's see here.
I like to ask the ones about risk and downside more than I like to be the guy that paints the positive picture. As much as the market is strong, and it's super strong. Ronald Reagan said, "Trust but verify." It's easy to go find this stuff out. Thing I like to do every month, I'm on one of the OTA sites, just looking at room availability, at what people are charging for rooms in San Pedro, Belize. It gives me a real good feeling of who's full, who's not. The weekend that we're down there, Buck, it's a busy, busy weekend. We've had a really hard time placing people. Right now, our Mahogany Bay Village is what we call our soft launch, meaning that we're not yet available for rent on OTA sites or through the Hilton. We are running what we call affinity groups. People are staying on the property, and they are staying for a far reduced rate in exchange for giving their feedback to us instead of TripAdvisor. And they're typically groups of folks that are coming down. It just so happens that the weekend that you're going to be there, Buck, we are 100% sold out, which will be the first time and not the last time. In the next 3 months, we have 3 more times that we've got no room at the inn. And that says we're getting our staff trained. Hilton provides amazing training. We're training the housekeeping staff and the bell staff and the reservation staff and the bar staff and the restaurant, and all that stuff is all coming together. And we're in the kind of this pre-launch, pre-open soft launch. We'll fully open the resorts later this year, and that's going to be determined based on a whole bunch of factors between us and Hilton. But we're on the verge of opening now, and we've got the pool open. We've got our hotel tax license in hand, which was quite a process. And now we're just waiting for the restaurant to open. We've got our executive chef. She's amazing. Spent 6 months in Belize at 2 of the finest resorts, and really, really thrilled to have her. We open our first food and beverage outlet in later February. So you'll get to see that when you're down there, Buck.
Robert, do we need to wait until all of the lots are constructed before sort of the hard opening?
Yeah, good question. No, originally we had planned, and when we looked at the map of the 2 phases, phase 1 is 205 rooms, phase 2 another 98. And originally we were going to not open any of the 98 until they were all ready. But when Hilton came down and the guys from Curio came down and spent some time, they've developed a plan. We build the lots in a strategic order. And so the way that it works is when somebody wants to purchase, say, a keeping suite lot, we have to look at what's available. And essentially, the Hilton product is virtually sold out now. But they're built in a contiguous fashion. That allows us to, as the demand is there, to open more rooms. And so it's going to be demand driven based on the demand of the marketplace. Right now, in the high season, we could have rented 100 rooms easily just based on the inquiries we've had, but we're not quite ready for prime time. We don't officially become a Hilton until we're ready for our full open. So that's, in the next few months, but it's really, there's no reason to wait once the units get built. So your units will be constructed based on when the money is raised, and then they'll be next in line so that we'll open them just as soon as there's demand for them. We're telling folks who are buying now that it's probably a year before income starts. So with a development project, a lot of what we do is in real estate development. You put your money in, it gets built, and when you sell it, that's when you get your return. There's no cash flow. Unlike if you bought an apartment building that had tenants in it, you cash flow from day one. This is kind of hybrid of that. The first year that you're not going to see any income because it's going to be not part of the rental pool, but once it's open, then the cash flow starts, and we would hope that that will continue to increase both in terms of occupancy and average daily rate.
I'll have one more question. I think maybe we'll wrap it up and get ready for the Super Bowl here. Tim asks, good question. What's the timing of the equity raise? So, Tim, because it's Reg C, once first step, the next step would be to make sure you get all the paperwork from me, the executive summary, the private placement memorandum. And if you decide to move forward, the next step is to have our third party confirmation, accredited investor confirmation company, get that done. That'll probably take about a week. And at that point, really, we're off to the races. And it really is a race, especially considering what Robert is telling us. There isn't a lot of inventory left. So we're trying very hard to, get some of these lots before they're all gone. We did come in a little late, but we also came in after Hilton came in. So we also got a little bit of the stability card that I was waiting for on this project. So we'll keep buying until we can't buy, or it doesn't make sense to, or if the type of property, that lot that we want is no longer available. But I think there's at least a couple of different varieties that I think that make a lot of sense for us as an investor group. So again, Robert, thank you so much for taking this time, hour and a half on a Sunday, on Super Bowl Sunday. Really do appreciate it. It's great to hear from the developer and and for everybody to get a sense of what the team is and who the team is. And I appreciate your time.
Absolutely. Well, I sure appreciate everyone who was on the line today. Yeah. It says a lot if you're serious enough to be on Super Bowl Sunday on a call. So thanks, everybody.
Yeah, there was 23 people, by the way, who made it, 36 registered. So I'm assuming those others will watch it, and hopefully we'll have a nice turnout here. So thanks again, and enjoy the rest of your evening. Take care.
Thanks, everybody.